I'll start with what is exactly happening in the IT sector. Due to pressure on discretionary spends, there are three key points that are to be highlighted. Number one, the deal wins are not getting converted into revenue. There is hiring freeze across the industry, although the attrition has normalized, while the global peers like Accenture have cut down their guidance for the coming quarters. Now, according to Bloomberg estimates, what is the street expecting from the Q4 numbers starting this Friday? The revenue is largely expected to remain flat. However, TCS is expected to outperform their other peers on the back of ramp-up of the Aviva deal and the BSNL deal wins. Can we roll over to the next slide, please? While on the EBIT margins, the margin is expected again to remain flat. However, Tech Mahindra is expected to outperform its other peers on the back of soft third quarter and a strong control on costs. Similarly, PAT is also expected to be flat for majority of the IT companies except TCS and Mahindra on the back of strong revenues. Harsh, can you go through our audience on valuations?
Let's take it across now. That's comprehensive, but let's cover a couple of points here. One is on Tech Mahindra. There's a new leadership. Mohit Joshi has come in. Some guidance around how he sees the vision for the company going forward will be pertinent to note. The other one also is, again, on the leadership front is going to be Wipro, and that will come. These are largely analyst return expectations. We'll come to that as well. We also have Wipro with new leadership. Again, very pertinent to understand as to how the turnaround in Wipro will happen going forward. On to valuations, largely, when I looked at Bloomberg, the 5-year averages in terms of price to earnings versus where they currently trade at 1 year forward price to earnings, they're largely in a similar kind of band. So no real divergence there, no pocket where we found some real undervaluation versus 5-year averages, mind you. But when you're looking at average return expectations, the meaningful ones are Infosys and LTIMindtree. Those two really stand out. 15% potential return is what analysts are penciling in. This is basis average analyst expectations. And Infosys, there's roughly a 13%. Outside of that, low single digit is the kind of number that we're looking at on the positive or on the negative side.
Okay, so a couple of questions really. One, and of course these analyst return expectations will change once the quarterly numbers come out. Rucha, to you first. Tech Mahindra. So is Q4 margins coming back? Is a return to normalcy, or will they actually outperform? Because I heard you say that some of the outperformance is also on because of a softer Q3. So will Q4 be at par with what they've done in the past and therefore just a return to normalcy? Or can they actually surprise on the upside?
No. So basically, Q4 margins will be on the back of a soft third quarter because there was one-offs during the last 2 quarters, and due to absence of one-off in this quarter, it will return to the normalcy of the range where Tech Mahindra used to give the margins at.
And hence maybe the PAT uptake also for Tech Mahindra looked strong,
correct,
I believe.
On the back of lack of one-offs, yes.
Okay, it's lack of one-offs. And Hersh, just one last thing. We didn't get the graphics when you were trying to do, but maybe we'll try it again. You're saying the 2 key points to watch out for is from Tech Mahindra's side, Mohit Joshi's commentary if he gives one, and 2 on Wipro, again, the leadership change that comes in.
Correct. So the leadership on both those counts will matter because it's new leadership, and it's a new set of people which are being backed by management to basically engineer a turnaround, both of which will be key to look out for.